Welcome to the NGEN Markets training session. Meanwhile, others are joining in. We would start with our session. So today's topic is about portfolio construction of mutual fund stocks, non-standard asset classes. Then we will head over to the analysis where we would check contribution analysis and we will improve the portfolio based on the portfolio allocations. So this is going to be the topics for today. So I hope my screen is visible for everyone and my voice is clearly audible. If not, please let me know in the chat box and I will try to address it. So let's head to our terminal. Just a second. So as you can see, this is the NGEN Markets terminal in front of you. And if you want to construct portfolios, there are several ways to construct. I will show you one way and then we can, build upon it. So to construct any model portfolios or portfolio of your liking, what you can do is you can head towards portfolios section here in the portfolios. And here there's a plus button where you can construct the portfolio. So before going ahead, I hope my screen is visible and my voice is clearly audible. If not, please let me know in the chat box so that I can address it up. And secondly, let's start ahead. And if you want to really add a portfolio, what you need to do is just click on this plus button. And here you can see a couple of options where you can upload portfolios and you can add your own model portfolio and stuff. So here we are going to add manually and allocate some particular allocation for each and every fund to actually take a look towards the portfolio we are constructing. So let's go ahead and let's create some portfolios based upon some funds, some stocks, and even some non-standard asset classes. So let's say we are selecting Nippon India Pharma. This is one fund we have added. Let's add gold. So Nippon Gold Bees, that is added ETF. And let's add a couple of small cap like Axis. So I'm adding a couple of funds just by typing their names. All you need to do is just type their names and they will be added into the system. So let's say you're adding Parag Parikh Flexi Cap. So that's going to be added into the system again, and they are equally allocated, as you can see. So we can change the allocations here. So, once we have added all the securities, then we can actually make some particular set of an allocation. So here, what you can do is you can also add in some FOFs. So let's say I'm adding Edelweiss GCE, which is Greater China Equity Offshore Fund. This is also added into the system. And then we are adding PGIM Geo, so which is also called as Global Equity Opportunities. So we are just diversifying the portfolio to show that you can easily add in a couple of asset classes in equities, in FOFs, and even in debt. So for debt, you can just add ICICI Approved Credit Risk. So, as you know that the debt, in a matter of fact, is not beaten CICIL bond. So we are trying to, see if we can run the analysis and come up with something insightful just by adding some debt securities into the system. And here you can see it's a pretty diversified portfolio as of now. And we have just added funds and the ETFs. What about stocks? You can also add in stocks. To add in stocks, you just type in one of the main stocks. I'm just adding one of them here. Let's say another one, right? So we have added some diversified stocks in the list. And here the customized security. So to add any custom security, first you need to add custom securities into the My Securities tab. That is a prerequisite. I will show you in the last, end of the session how to add a custom security. But here I have preloaded that custom security. So let's say Vanguard ETF is one of the custom security we are trying to address. So here you can see, we have loaded the portfolio with a couple of ETFs, a couple of stocks, and even some debt funds. Now, what you can do is you can allocate as per required. So for an example, if I want to allocate 30% to Parag Parikh, I can easily do that. I can easily add in more allocation to GEO, so 20%. But you can see the allocations here is 140, which is more than 100. Now, if you want to rescale it, or if you want to equally allocate it, what you can do is you can choose to have these two buttons. Now, these two buttons are pretty useful because let's say I want to rescale all these in one single shot. All I need to do is just click on it. And you can see it is rescaled to, closer towards 100. And you can then, edit it accordingly. So you can see now it is 100% allocated as an entire portfolio. Or either way, you can also equally allocate it. So equal allocation is also possible. And then you can name a fund, like name of the portfolio, like diversified portfolio. And once it is done, you can just save it as a portfolio in the left side. So I've just added a diversified portfolio and I just create it. It gets saved in the left side in the left tab. Now here, as you have seen, I have actually made couple of allocations. Now there's an equally allocated portfolio in front of you, and there's a way to improve this portfolio as well. So we will talk about the portfolio improvement as well, because as there is too many permutations and combinations, like for example, if I allocate 20% to Reliance and then I rescale it and run it, I will see some different sets of performance on the basis of allocations given to the Reliance Industries as a stock. So here, when you head into the performance, you will see some performance based on the current allocations in the portfolio. So let's head back and just equally allocate and then run the portfolio, and then we will look towards the contribution analysis and improve the portfolio to see which securities are actually performing well based on the rank returns or volatility or even the Sharps ratio. So let's run this up. So to run this, I'm just gonna run this up, equally allocated portfolio in front of you. And here, the first thing you would take a look towards is an asset allocation. So I'm just gonna give you a brief of asset allocation that whatever we have allocated based on the stocks, the non-standard asset classes, you can easily see that into our system, like the Vanguard ETF, which we have added as a custom security, the Reliance Industry, which has been added as a stock. Now you can click on this I button and you can see that is a direct holding. So no other mutual fund holds that particular stock. Only we are having Reliance Industries through the direct holding. So that is, one important thing. And you can also take a look towards Sun Pharma Industries. If I click on it, you can see that, okay, that is coming from two funds, which is Nippon India Pharma and another is Parag Parikh FlexiCap. So these are the causes of the exposure for the Sun Pharmaceuticals. So that's Sun Pharma Industries. And that you can also take a look towards different sets of the detailed view. Like for an example, if I want to break down this debt into more tab like NCDs or government securities, all I need to do is just click on the detail views. Now you can see there's a NCD exposure which is coming from some fund, which is IPRU Credit Risk Fund. Similarly, for the gold, I can see the gold is definitely coming from Nippon India ETF Gold Bees. So that's specifically it when you're taking a look towards an asset allocation of the portfolio. Now our main topic is to take a look towards how has this securities which you have added as a diversified portfolio contributed, so that we can analyze them and give them better allocations. So for the contribution, all you need to do is just head towards the contribution tab. And there, what you can do is you can see the contribution based on the start date given here. So start date, you can change first of all. And second thing is that you can also change the start and the end date here. So now it's considering a start date from 2009 till current date. And when I choose a start date, let's say 2015 or 2017, and an end date for the current date, I can run this up and I can see the total return of the stock and the fund and whatever I've added in the portfolio, and also the contribution towards the return. So here you can see the contribution towards the return is high in Reliance Industry from the last 5 years. Now, what if I change the date? What if I make another point-to-point analysis to see what has been the contribution of these securities in this portfolio? What I can do is I can change it and go back to, let's say, 2011. And for a long run, if I just run it up, that is actually Axis Small Cap. And then second one is Reliance Industries. So that's specifically it when you look towards the contribution towards the return in the portfolio. Now, what is contribution towards the return? I'll just reset this up, right? Now here you can especially see the total return. So this total return is the total return of the funds and the stocks and whatever securities are added, regardless of the allocation. The allocation actually takes into account when you're taking a look towards the contribution to the returns. So whenever you click on any of the bar, let's say for an example, Axis Small Cap. So the return contribution is 50%. When you click on it, you can see the allocation towards the portfolio is 9.09. And that's how the the contribution towards the return is 15.96. And that is how you can actually see which of them have been an underperforming assets in the portfolio. Like for an example, Tata Power, HDFC money market is another underperforming, as it is debt, but still, you can see one of the stock is actually underperforming against a credit risk fund. And you can also recognize for a different sets of period. So as I've stated before, make a scenario based analysis and contribution. Like for an example, let's say going ahead with 2017 and 2021, right? So from 2021, when you run it, you can easily see the contribution of these assets between these sets of returns. So you can see the contribution of Reliance Industries has been pretty high, considering PGIM India global equity opportunities, then Tata Power. So for a current base scenario, this has been the case. Now, how do I allocate funds or the stocks or the ETFs based on the performances? One thing is you can already look towards a total return. You can just get ahead with the changes in the allocations just by doing manually. So let's say I'm manually allocating highly towards Reliance Industry as 20%. Rescale this to 100, it is 18%. Once I run this, now you will see the contribution which will be different than the previous portfolio, right? And you can run as many permutations and combination just by a single matter of click. And you can see that Reliance is one of the highest contributor, as you have allocated highly towards that particular set of a stock. And you can also download this data set in Excel if required. Now, this is very, very useful because, if you want to improve such a portfolio, how do I do that? How do I, just skip this allocations one by one, and come up with one single button and just improve entire set of a portfolio? There's a button called portfolio improve which will help you in the diversification. All you need to do is just click on this improve, and it runs the portfolio accordingly. So I'm just gonna show you. There are 6 sets of models in this portfolio improve button, and also an equally weighted model. So equally weighted, you can compare it with each other. So just a second, it is just running in. Yeah, 1 second. So I'll just run it again. Yeah. So once you run this, diversified portfolio and improve the portfolio, you can easily, run in the portfolio improve. So just a second. Yeah. So as you can see, we have added a couple of securities, and here you can see that there are 6 sets of models, which includes ranking model and the value model. So within ranking model, what you can do is you can especially focus towards return. So I'm just going to narrate all these models in detail. One is the original one, which you can see that we have allocated highly towards Reliance, and that's the original one we have actually taken uh, uh, allocations towards. Other one is actually pretty different. So you can see here as well, there is a rank returns which allocates highly toward that security, regardless of a fund, stock, or an ETF, uh, that which is contributing highly towards the return from a particular start date. So a start date is given here, it's 2014. And this is very important because this 2014 is a minimum common period. It's the youngest securities start date in the portfolio. And here, what you can see here is that there is an increase in annual return if you would have, taken a different asset allocation based on this model. And the volatility, you can see the volatility as well, and also the increase in the Sharpe ratio. Similarly, there are other ways to allocate. So there's another way, which is minimum volatility. Now, what this does is that the model chooses those securities which is contributing highly towards minimum volatility in the portfolio. And you can guess it right. It's HDFC money market, as it's a debt fund. You can see it's 34% allocated. One of the minimum volatility can be achieved if you allocate highly towards HDFC money market, right? And here we have the rank Sharpe. So rank Sharpe allocates highly towards that fund or a stock which has a contribution to the Sharpe ratio in the portfolio. So these 3 model is a concentrated model. It concentrates towards one particular security, which is given highly, which is given a contribution highly towards the return, minimum volatility, and Sharpe. And you can even save this model one by one. You can save different sets of models, make their own versions of this, your own model portfolio you have made here, and then save it. So let's say I think this is a favorable model. What you can do is you can save it as a model portfolio optimized, and I can just type it as sharp, right? So I've taken this as one of my portfolio, which I think is pretty diversified, number one, and also pretty much allocated highly so that I can achieve a pretty good Sharpe ratio and also a better annual return against the original one. So as we, this entire thing of permutation and combination of manually editing the allocations is eliminated just by using one single portfolio improve button. And here we also have a value model. As I talked about this is a concentrated model. Let's say we are talking about we do not want to concentrate too much towards one security. So how do I do that? So you can see this is a value model which also focuses on return, minimum volatility, and Sharpe's ratio, but in a balanced way. So you can see a focus is towards Axis, Reliance. They are the contributor towards the returns, but not too much like 34.14%. And you can also save these models because these models are also better than the original one. As you can see, so one of them, returns value, is actually pretty much better. And these models will help you to take a decision on based of the allocations, and also on the base of these three parameters like returns value, minimum volatility value, and also the Sharpe's value. So that's what it is, and you can save it as well. So I will just type it as value returns so that I can have another version of my model. So, and I can compare these models one by one if possible, and save it as a new portfolio. So I have two portfolios right now. One is the original one, and another two portfolios, which is one based on the ranking model and another on the value model. And then we have the equal weightage one, which you can always compare it, because you can see there we have no equal weightages. We had some allocations in some one single stock, and the equal weightage would be kind of like a benchmark that had you done your equal weightages in the portfolio, this is what the annual return would be. The volatility and the Sharpe ratio would be based on the start date of 2014. Now, the start date of 2014 is considered as minimum common period, as I'm repeating again. And you can also always check the minimum common period just by running a portfolio and just clicking on this, change, which is a start date, and click on this minimum common period. And you will get the minimum common period, which considers the start date of the youngest security in the portfolio. So that's specifically it for the portfolio improve. Now, what about the portfolio improved, portfolios which I have actually saved? The optimized portfolios are saved in a folder called from improve. So what you can do is you can just click on this and you can just run one of them. So let's say we have already two of them. You can just run, and these are the improved portfolios which we have added on a customized way, and we have improved them just by the matter of clicks. And you can see the performance, the contribution given in the tab. So highest contributor is actually Axis and Parag Parekh, due to the fact that they have contributed highly towards the portfolio in the last 7-8 years. So that's specifically it for creating portfolios based on mutual funds, stocks, and even non-standard asset classes. One important thing is that you can create such portfolios not just in this tab. There are a couple of other tabs where you can create portfolios. One tab is actually in the client section. And in the client section, what you can do is you can go to the manual data and add a client, name anything, like let's say a model client, right? You can even add a existing or a prospective client here with the PAN number, which can be anything. Add a client, and here you can easily start adding the funds. So now, why this is pretty useful? Because here you can input units and the current value. So a unit like 3,000 units, you can see this is the current value of it. I can add in another one, and that will actually create a portfolio. And here you can even add in a stock, right? So here specifically, you can see that I've been adding two of the funds. One is debt, one is equity, and other one, let's say a stock, as in a Reliance stock, right? So we have added this, and that's specifically. So you can actually, once you click done, it allocates based on the units and the values, and you can see the allocation. So it's a high allocation to one particular set of a fund. So that's specifically it, and you can run the analytics on it just by the. So this is one way to also construct a portfolio based on the units, the values, and even add it into the system, right? Now, one important thing is that there is we have talked about the adding non-standard asset classes. So a non-standard asset class, in the sense, we were adding Vanguard. So Vanguard, how do we came up with this data? So this data was actually through custom security. Custom security, you can always access, make a portfolio is through my securities. So to add a data sets, I will just do a live data set example in front of you. Let's say we have the data sets of Microsoft. So Microsoft, you can easily get a data set. All you need to do is, I hope my screen is visible to everyone. And what you need to do is you need to just take close or adjusted close depending upon your requirement and copy this only two data sets. So I'm just going to delete other. This two data sets you need to copy till the current date and paste it in our system. So once you paste it in our system, you can even write it as Microsoft. That's December 2022 data. And then I'm just going to click as equity and validate it. Once I validated, the Microsoft datasets, which I copied, can be saved into the system. Once it is saved into the system, now non-standard asset classes can also be accessed into the system. All you need to do is just head towards the portfolio section. And once it is saved, I will show you the portfolio section where Microsoft of the December data of Microsoft is added. So here, let's go to portfolio section again. Let's add in the portfolio. And now we also have Microsoft, which is added as a December data sets. Also the Vanguard, which I've added previously before this session, and also the stocks and the funds, you can easily add the domestic stocks and the fund. And you can even run the portfolio based on the two securities added into the system. So here you can see the correlations between the two, like the Vanguard ETF and Microsoft is pretty much having quite a correlation between each other. It's closer towards one. And also there is another way to construct a portfolio. So on the brief sense, I will show you there's another way is actually through the compare button, because compare section is one section which is pretty robust and can also come up new ideas. Let's say I want to add Parag Parekh, and you might have a list, right? So all you need to do is just make a list. If you have a list, all you need to do is just click on this, the list is added, and couple of funds are added, and then you just have to connect them to the portfolio. So I'm just adding a gold, right? So now there's an ETF, there's two large cap funds, there's a medium to long duration fund, and all you need to do is just convert to the portfolio. Once it is converted to the portfolio, it will be equally allocated, and I will show you the folder where it gets saved. So once you click on it and save it, you just go ahead with the portfolio section, it gets saved, and from compare, this is the folder which will be generated automatically into your system. There you will see this from compare 72, which is currently added. This is a date and the time. And here you can just edit it and you can see that, okay, these were the funds which were added. So two of them were large cap. One of them was ETF gold. Another one was medium to long duration fund, right? So that's specifically it for the portfolio construction for today. And if there is any question, then we can head over to the Q&A if there is any question.
Hi, can I ask a question?
Sure, please go ahead.
Well, my question is on that portfolio improve functionality of the platform. Once you go to get the portfolio improved, the system throws the data which is within the universe of the scheme of the portfolio or the constituents of the portfolio. It doesn't actually throw suggestions from outside the portfolio constituents. So don't you think once a client is, once we are really willing to get the portfolio improved, the system should be able to get some good quality options from outside the universe of the portfolio also?
Sure. Well, to answer that, the thing is, if we're mathematically looking for, let's say, quote unquote, good funds, depending on the method, you were continuously going to get the same funds. So the issue there is that In this case, what we do is obviously take the list of funds that you have entered and we try to reallocate to them better, but not suggest new funds. Now, since this process is completely mathematical, we don't use our own judgments here. As a result of that,
I get your point. I get your point, but
Arunab, let me answer him.
Yeah.
The point is that we cannot go beyond the universe of your portfolio that you're entering. Is that we are not allowed by SEBI to give any kind of suggestions as an independent platform. We cannot do any kind of suggestions for that matter.
So, and also, you know, the answer, for example, if you look at the ranking model, and let's say the ranking model was able to look through the entire universe of funds in India, no matter what portfolio you put, we would always tell you, go to these 5 funds, right? Because that analysis would be independent of what portfolio you're inputting. It's not that that our answer of the best fund would change because you have Aditya Birla, Franklin or Sundaram in your portfolio. Our answer of the best funds will always be the same. So in effect, we would basically be marketing a sort of portfolio as such, right?
No, I really appreciate the objectivity that you guys are practicing here, but my point was slightly different.
Yes, sir, yes.
See, if it is the regulatory issue, I really respect that, and we can definitely kind of avoid this discussion here only.
Yes.
But if at all, I say within the platform itself, we are really going through different metrics. So one metric is rank returns, another is minimum volatility, another is rank Sharpe ratio. Another could be rank sort, you know, this, that, etc. Yes. So within that only, let's say if we are really willing to get the portfolio improved, let's say on better upside management of the fund, right? So in that category, you can also in the same category. So for example, there's a fund, let's say in large and mid cap category in the portfolio, which is being reviewed right now. Within the large and mid cap category, if there's any fund which is having better Sharpe,
got it,
rather than sticking to it, so that kind of suggestions, if you could throw it on side, you don't not kind of so I'm just saying from the utility perspective of the platform. Otherwise, what you're doing is definitely very good.
Yeah, absolutely. So here I'll add to this that we have something coming up soon, which is actually you know, not exactly what you want, but we are currently working on a kind of a strategy section.
Okay, this is one. My second question was when we are really constructing a portfolio, right? A new portfolio we are constructing, or let's say we're trying to improve. Why don't you give us, let's say, a blockwise integration or blockwise distribution for different asset classes rather than putting schemes upfront. So, for example, once we have to start building up a new portfolio, we have to get the new schemes added one by one in the portfolio, right?
Yes.
Rather than schemes first, why can't we really have the options of the category? So let's say, for example, I tell you because I have been using my Excel model for really constructing portfolios till now, wherein I put in the asset classes first, looking at the client's risk profile, his goal readiness, nearness or distance to goal, and so many other factors.
Yes.
Once that category analysis, category allocation is done, or asset allocation category wise is done, then I go to scheme.
Understand. Yeah.
Level. So why, if you could do that, that I think would be another functionality benefit.
Yes. So what I can tell you is that we are coming up with a strategy section where we will be able to kind of give you examples of mathematically constructed portfolios with general diversification in mind, targeting certain level of risk. You know, obviously you're free to use the, you know, you should use the portfolio section to create your own portfolios, but we will put some examples out there to help people also look at them. So you'll get some idea of generally what mathematical kind of answers we are getting, regardless of your funds. So they will, our systems will actually pick funds based on their returns and risk statistics. Now, in the same way, if that works out well, that's not a bad idea that we can also come up with a you know, category allocation, various different kinds of category allocation, and also help you kind of suggest it. So, so yeah, I mean, you know, when the strategy section should be out soon, most likely well, hopefully in January next year. So we can definitely, we will rely on your feedback from our users, to basically improve it going forward.
I really appreciate that, because you've been one such company, because I've been parallelly dealing with a couple of other software providers also for my practice. And you guys have been really reciprocal to the feedback. I can say that.
Yes, thank you.
So that's why I really thought, so this category allocation first, and then further dissecting it into different schemes would be a very, very, I would say, important and I would say handy kind of a tool for all of us.
Perfect.
Thank you so much.
Thank you. Thank you. There's another question on the chat saying that sometimes the results in the portfolio improve section, the one that we are looking at right now, comes up with a result that is not better than what you've input. And absolutely, that will happen sometimes, because after all, behind this is not a person, it's a machine. So sometimes you will get results which are not ideal. So what we do is we give you the results of 6 different models, which then you can use your judgment to pick. And of course, there will be times where maybe the portfolio allocation that you have are quite good already. So the room for improvement is not that much. In this particular case, for example, what we're looking at, you can see the original portfolio Sharpe ratio is 0.23. And if you just simply compare that to the equally weighted portfolio, which means, close your eyes and just put equal money in everything with no regard for anything. Even that is doing better than our portfolio that we've input. So we can probably make a reasonable, kind of judgment here that the original portfolio isn't very well constructed. And so it's easy in this case for us to see that all 6 models are actually giving you an improvement. But sometimes, as you've noticed, you will find a case where your portfolio is quite well constructed, and some of our suggestions are actually underperforming what you already have. And in this case, the improved answers will not be useful. If there are any more questions, please go ahead and ask. Either just unmute and let us know, or just on the chat if you like. Okay, it doesn't look like there's too many other questions right now. So just to let you know, we have a release scheduled on the 24th of December, and we have several things releasing on that. Quite a few small, suggestions that we've got. Some of them big, some of them small. And also, we're going to be upgrading the statement analyzer that was released recently. As you know, you can easily upload any NSDL, CDSL, or CAMS file here. And once you've done that, not only can you view and download it, you can add it in the portfolio set. But lots of our users have actually asked us that they would also like in this, so this is already working, but people have also asked us if they would like to upload their files and then add them to the clients section. So Mayor, if you could just quickly show that so people can see. And in the manual data section where you see that add client on the top, just next to it, you will basically get a new menu item on that release where you'll be able to add the client. And in this case, the benefit of using the client section instead of the portfolio section is that the values and the holdings and the rupees will be displayed here, which also means that when you print the PowerPoint presentation, the correct latest AUM of your client's NSDL statement, valued at today's prices, will show up in the analytics when you after you run analytics in this way. So you can look forward to that coming on 24th December, along with a few other items as well. There it is. So what Umesh just did is he printed a PowerPoint where the AUM basically flows through. So when you actually send this PowerPoint up to the client, on the left-hand panel, you will actually see the AUM as of the latest fundraisers.
Is that all for today?
Yes, sir. Since there are no more questions, I think we can close off for today. So thanks for joining, and we will see you next Friday.
Thank you so much.
Thank you.